Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, November 12th, 2023. So, what a just crazy week. Thursday, we saw the Fed chairman come out and kind of throw some cold water on the bulls, thinking that he's going to be loosening. And then Friday, I'm not really too sure what kicked off this rally and kept it going. But in any case, I did leave the door open for a possible break of the highs on Thursday once we saw the futures up. And that's really what was just to close this gap, which we did. And if we take a look at some of our buy-sell charts, here you can see that we have a massive bearish divergence on the hourly chart here. But we were pretty oversold going into Friday. That got wiped out. And now we're back into the overbought levels. And we're still in this resistance zone. So if the bulls can push higher on Monday, 44.25 is most likely going to be the an area where some bears will be waiting. But if we just take our other one, which they got above, so it'd be anywhere between the 44.25 up to the 44.58. So I didn't want to do anything on Friday just because I didn't really feel like adding to the position. I figured if they come up, that's where we're going to start building it on the short side, and it'll be a quick move to the downside. It's just a trade. I'm only looking for 100 to 200 points on the S&P and step away, and probably use it as a buying opportunity as we, at sometime next week or early into the following week, which would be Thanksgiving week. So I'm being patient right now. Right now we're about 16 points on the S&P underwater, so nothing, even with the big move, it really didn't do anything to our position because we got in pretty close to the highs right here, 43.98 or 97. So we're here. I'm gonna see how things play out on Monday because these sell signals are pretty good. And then another one I want to show you is this is the NIAD, which I had showed you in the premium report here, and we still have this big sell. Even with the massive day on Friday, we're still on a sell signal. Now it may fix itself, but right now, this is throwing up some red flags for the bulls right here. So if we take a look at the 15-minute chart, this was one of the reasons why I didn't really want to take a position on Friday, because we didn't really have any true divergences until we started coming in towards the end of the day. And I just really wasn't in the mood to be buying or, adding to any position as we head into the weekend. So I'm holding it. Like I said, if they see higher, I'm going to pick and choose where I'm going to start building the position. But the downside, I'm still anticipating that we're going to see a move. Let me actually move our fib lines here to get up to where we are. So being we're at this phase where we have these big sell signals, I believe on a bare minimum, we're probably going to be coming down to the 50, possibly even 62% retracement. And one of the reasons why it makes sense is that, let's say we get down close to the 50, we still have this open gap at 42.63, and it almost matches up perfectly with the 50% retracement. So if they go higher, I think some people may be looking at this as the inverted head and shoulders, and I think they're dead wrong on this. It's just not enough of shoulders really to be there. So I'm still looking at the bigger one where if we come down, this would be the left shoulder, this is the head, and this would be the right shoulder. So that's really what I'm anticipating that's going to be playing out on this. But we just have to see what happens with, when we start on Monday. If we open up, again, I probably will be looking to take some type of position pretty early on in trading. But I want to just make sure that, we start seeing, all the indicators start to roll over and we start going into the heavy resistance. So the bears, they're going to, the main thing they're going to have to try to get through right now is going to be these lows. That's the 43.42, because this is the 200-day moving average. Now, we have this support at the 43.90 area. and that's where we kept hitting our head on it. So obviously, this is going to be where bulls are going to be waiting, as well as the 43.85. And if they get through it, that's when we should see the move coming down to the 43.44. Now, one thing that could be a little dangerous, let's say for the bulls here, is I can possibly see a bearish head and shoulders setting up here, and I'm just going to draw it out. Hang on one second. Come on. Okay, so this would be the right shoulder. This is the head, and then we come down, pop up, and then down again. So this could be playing out. And again, what it would be is a couple patterns mixed into one, where this is the head and shoulders pattern if it played out. And then if it plays out on it, it's going to bring a target area down here, which would then cause the right shoulder of the inverted head and shoulders. So I don't believe this is any runaway train. I'm not. I think they just found a reason to try to squeeze the shorts. I'm not really quite sure what the rhyme or reason was, but it's why we layer in. I let them. They burned a lot of gas coming from the lows up to where we are again, and it kind of amplified the sell signals that we have on the 60-minute chart. So I'm sticking with my position where I'm looking to short term, and then buy for the move where we head into the seasonality strength, which would be into Thanksgiving, maybe have a little pause, and then up into the end of year or into Christmas. So let's see what plays out tomorrow. Have a great night, and I will talk to you guys in the morning.